I'm Lisa Botter, Assistant Managing Editor at The Deal in London, and here with me to discuss is Christophe Baviere from IDInvest Partners. Welcome.
Thank you, Lisa.
FinTech and tech are generally reliant on three key ingredients: financial capital, human capital, and friction-free access to markets and customers. How do you think this is affected by the Brexit decision?
Well, as you just mentioned, it's based on friction-free access to capital and to people, so nobody could argue that it's a good news. But nevertheless, if we look at London, London has been, is today, and probably will stay a leading financial place in the world. So there is no doubt that London will continue to attract very interesting creation of FinTech. We tend to believe that nevertheless there is an opportunity. Europe is growing in terms of ability to launch successful FinTech companies in the future.
So do you think Europe's position is growing out of the Brexit decision?
Well, probably it will create more regulation, more borders, and as you know, FinTech startups are based on the ability to move very fast and to adapt to uncertainty. The Brexit is creating some uncertainty. It will create new regulation, new borders, and probably, yes, FinTech, there will be an opportunity for FinTech to adapt to this new environment.
And many FinTech companies aim for an IPO, but in many cases they end up being acquired by larger companies. Can you tell us a bit about this and what's going on with Brexit, with this trend?
It's a real issue. Venture in Europe is bouncing back versus US, but it's still quite challenging to be at the level of the US industry in terms of venture. But it's improving. And the reason why it's improving is because we face more and more successful, talented, serial entrepreneurs. We need to help them to adapt to a situation where in the dream of each European entrepreneur still, IPO is the only way to be successful. When you see the statistics in the US, no doubt that the venture asset class is successful in the US, no doubt that some IPOs have been incredibly successful and ranked today among the largest capitalization in the world. Okay, but a large number of successful stories of successful entrepreneurs have exited through a trade sale. In the FinTech area, we need to take into account that probably there will be less IPOs and more trade sale. Why? Because the financial industry is already well organized in Europe, and it's also heavily regulated. So at a certain level of development, probably it will be easier to continue to grow fast by being acquired. Some IPOs will take place, but the idea that there is only one dream in the venture space, which is the exit through an IPO, probably needs to be adapted.
Is it traditional banks that would be going after FinTech companies?
It's, I would say, the entire industry. We all have in mind what is very interesting today is to see that leading mature industrial leaders like banks, but also like insurance companies, like service providers, are taking into account that innovation is taking place faster and maybe in a more easy way through startups rather than internally. I'm not saying these large organizations are not innovative anymore. I'm saying it's difficult for them to be heavily regulated, to be cost-centric, and also to incubate internally disruptive innovation. But we see clearly today that all these large industrial players, they have in mind that they will need to integrate successful stories.
How does the FinTech company change once it's acquired by a heavily regulated bank or insurance company? kind of constraints are then on their innovation?
It's always a difficult thing to do to integrate a startup inside a large organization. When you look, for example, at Cisco is obviously a large leading industrial worldwide player, but they are also acquiring very regularly startups. And the way they integrate these startups, they leave them into still a kind of entrepreneurial mode, has to be followed, has to be... you need to see how they are doing, and probably for industrial group, for financial groups, they will have to do the same. They need to adapt, but I think they are ready to do so.
And can you tell us a little bit about current level of acceptance of innovation and new products and services that are affecting fintech companies?
It's impressive in the fintech side. We all have in mind that it's difficult to promote innovation in any component of our daily life. But regarding fintech, it's impressive to see that people feel free when they interact with a fintech innovation. They have a positive bias. It is the case for the final consumer, like you and I, but it is also the case for B2B business models. We've backed a company that is called Cantox. Cantox, what they are doing is that it's a kind of e-broker dedicated to foreign exchange. So we talk to mid-market CFOs of mid-market companies. This is supposed to be normally a relatively traditional population of people. CFOs of mid-market companies are supposed to be quite conservative. And in reality, they have been interacting with Cantox in a relatively fast period of time.
So they're seeing what needs to be changed and looking out to...
They think the opportunity, for example, usual CFO of a mid-market company in Europe, if they change their bank account, it takes a cycle of decision, which is usually 6 months. But in the case of interacting with an internet platform called Cantox, and it's a startup still, they are able to do the purchasing, to interact with the company in a period of 6 weeks, and maybe in some cases 6 days, which is faster than their interaction with traditional players in the industry.
Thank you very much. I'm Lisa Bauder at The Deal. Thanks for watching.